All right, welcome to today's Explainer. We're unpacking a reality that sits right at the very heart of modern trading. Honestly, this is the ultimate David versus Goliath story of our time, just with a very 21st century twist. We're going to explore exactly how the financial market has fundamentally shifted right beneath our feet, and it's all down to one thing: the raw speed of information. Now, if you've ever felt like the stock market is operating on some invisible frequency that you just can't quite tune into, well, you're absolutely going to want to pay close attention to this one. We're stripping away the myths and looking directly at the data. So, I really want you to think about this question for a second. Can your charts predict a 3 a.m. post? Because right now, millions of people around the world are poring over their screens trying to find some kind of perfect mathematical certainty in the market. They're placing their absolute faith and, their hard-earned money in technical analysis. But what happens to all that perfect mathematical certainty when a completely unpredictable, world-altering piece of news just drops in the middle of the night? Let's break down what you're actually up against. Section 1. The setup. The illusion of control. Let's take a quick look at the dream most retail traders share and the tools they use to convince themselves they're the ones driving the car. Okay, let's dive into the retail trader's arsenal, the very things you're hoping will help you beat the market. You know these well, right? You've got your candlestick charts, your complex price patterns, trend angles, those perfectly drawn lines of support and resistance, and your RSI indicators trying to tell you if a stock is overbought or oversold. You spend hours meticulously setting up your screens. You wait for that perfect magical convergence of all these indicators, and you feel like you're practically reading the Matrix. But here is the mind-blowing reality. Over in another corner of the financial universe, someone just proved that your meticulously drawn charts have absolutely zero value when the real market movers step in. All of those trend angles and support lines, they get completely obliterated in a fraction of a second. Why? Because while you're busy analyzing the past, they are quite literally purchasing the future. Section 2. The reveal. The truth social shift. To really understand how information speed rigged the market, we need to chronologically look at how political communication was fundamentally rewired. So let's see how this all unfolded. Back in January 2021, Donald Trump faced total bans from the major platforms like Twitter and Facebook. Just like that, one of the most powerful, market-moving voices in the entire world was silenced. But as we know, politics abhors a vacuum. Fast forward to February 2022, and Truth Social officially launches to create a completely new ecosystem. Then we jump to August 2025, and we see the ultimate evolution of this platform, the launch of the Truth API, specifically targeting hedge funds. Now, to understand why a hedge fund would care about an API for this specific platform, just look at who's actually on it. You've got Donald Trump with 13 million followers, Vice President J.D. Vance, the FBI director, the U.S. Health Secretary, and a whole host of other top officials. Now, regardless of where you fall on the political spectrum, from a purely objective market standpoint, this platform has become the primary megaphone for the top levels of the American government. It is literal ground zero for the news that moves global markets. And that brings us to the absolutely crucial point: major policy announcements. We're talking tariffs, geopolitical tensions with Iran, massive trade deals with China. These aren't breaking on traditional cable news first anymore. They are all being posted right here on this specific platform first. Traditional news channels are suddenly playing catch up. If you're trading the news and you're waiting for a ticker to scroll across your TV screen, I hate to say it, but you're already way too late. Now check this out. Here's a surprisingly low number: $3.7 million. That was the platform's revenue in 2025. Meanwhile, they were running operational losses of over $100 million. From a traditional tech startup perspective, that looks like an absolute disaster. If you think they were trying to build a traditional social media platform fueled by ad revenue, those numbers make zero sense. But that's because we've been looking at it all wrong. Suddenly, those numbers make perfect sense when you realize what the true business model is. They are selling information, not an app. The app on your phone? That was just the delivery mechanism. The true product being sold here is pure, unfiltered, highly actionable information. And who values a heads up on information more than anyone else on planet Earth? Wall Street. Section 3. The twist. Buying milliseconds of time. And this, right here, is exactly where the market becomes systematically rigged against the retail trader. Just look at this stark contrast. On one side, you have you, the retail trader. You're sitting at your desk, you've got your perfect support and resistance lines drawn, your RSI is signaling a perfect buy, everything looks flawless. On the exact opposite side, you have a massive hedge fund. They are paying massive fees for an API, which is essentially a direct, high-speed computer-to-computer data pipe. The very millisecond a market-moving post is published, it hits their algorithms. They execute their trades before your broker even registers the data, long before your favorite news site hits refresh. So I'm going to ask you again, which of your indicators predicts whether a world leader decides to post at 3 a.m. versus 6 a.m.? The answer, of course, is absolutely none of them. When you're sitting there with your perfectly calibrated technical setup and a massive geopolitical announcement hits the wire and triggers $1 billion algorithmic trade in a fraction of a second, your setup is instantly destroyed. You just can't chart human unpredictability.
As the source material bluntly puts it, you aren't playing the game. You are being played. Look, I know that's a really tough pill to swallow, but it's totally essential for your financial survival. Wall Street's high-frequency trading algorithms actually need retail traders to be on the other side of these massive, speed-driven trades. They need liquidity. They literally need you out there placing standard trades so they have someone to buy from or sell to while they act on that instantaneous information. Section 4. The trap, greed, and the downward spiral. This rigged system totally relies on a psychological trap built to pull you away from sensible investing.
Let's walk through this painful step-by-step reality that catches so many people. Step 1, you start out smart. You invest, you hold. Step 2, you make slow, steady profits. Awesome. But then, step 3, greed kicks in. You want fast wealth. You want that lifestyle you keep seeing on social media. So step 4, you shift your whole strategy. You move into heavy leverage, futures trading, scalping. You step right onto their algorithmic battlefield. And finally, step 5, the inevitable happens. Your portfolio hits zero. Keep in mind, social media is totally flooded with people showing off their big wins, but literally nobody shows you the moment their funded account gets completely wiped out. Section 5, the solution, the long-term wealth game. Now, you don't have to be a victim to API latency arbitrage, which, by the way, is just a very fancy way of saying profiting off tiny delays in information. The solution is actually really simple, though it does require immense discipline. The core takeaway to escape this whole trap is simple. Whenever in doubt, zoom out. Seriously, when you stop obsessing over those minute-by-minute candlestick charts and start looking at a 10-year horizon, all that noise just disappears. The random 3 a.m. social media posts that totally wreck day traders, they become nothing more than tiny, irrelevant blips on the massive upward trajectory of a well-chosen long-term asset. So how do we actually take back control? Well, here are the rules for unrigged wealth creation derived directly from our source material today. First, pick the right industry. Second, find a futuristic product you genuinely believe in. Third, invest quietly every single month, completely regardless of the news. Fourth, ignore the charts. Just ignore them. Fifth, do not try to time the market. Time in the market is what actually matters. And finally, please leave those Telegram trading signal groups. They are literally just leading you right back into the trap. The overarching philosophy here is to become rich slowly with discipline. Getting rich slowly is virtually the only mathematically sound way for retail investors to beat algorithms that can literally buy time and information. Algorithms thrive on volatility, they thrive on panic. What they cannot defeat is patient, disciplined, long-term consistency. I'm going to leave you with this harsh but super memorable reality check from our source material today. Accept the market is rigged or go watch the Pogo channel. You have to operate in the reality of the market as it actually is, not as you wish it to be. As these algorithms get faster and this data gets more exclusive, we really have to ask ourselves, are we entering an era where human intuition in short-term trading is just officially obsolete? Let that sink in before you make your next trade. Thanks so much for joining this explainer, and we will catch you on the next one.